Good morning and a big welcome to our UK Export Finance webinar this morning. My name is Jaya Calder from Highlands and Islands Enterprise and I'll be running your webinar for you today. Now, before we start, I'd just like to remind you of how we can get you involved. Although you've come in and you're automatically muted, you can send us your questions, comments, observations throughout the whole of the session, and we'll pick all of those up in the formal Q&A at the end of this session. Now, we routinely record our webinars and share the recordings along with the slides in a PDF format afterwards, mainly on the Offshore Wind Scotland website. But what we do is we'll email you when that's available. So let's get started, and I'll pass on to my colleague Gillian Morrison to kick things off. Gillian.
Hi, good morning everybody, and thank you very much for joining us today. We're really pleased to be hosting the webinar this morning on behalf of Deep Wind and Forth and Tay Offshore, the two offshore wind clusters in Scotland. Offshore wind is a global market, and with quite a complex at times procurement and contracting landscape, this is a really important subject matter. So really pleased to be to have some experts with us today around finance and export finance. What I'd like to do now is just take a quick look at the agenda. So Paul, if you could move the slides on, please, that's great. Thank you very much. So we're going to get underway very shortly. Paul O'Brien, Cluster Manager for Deep Wind, is going to do a look at international customers and offshore wind. We're then going to move on to Colin Walls, who is from the Bank of Scotland and is going to talk through supporting working capital and UKEF. We then move to Alistair McMillan, who is from UK Export Finance, and he will go through some of the products that they have. Lindsay Shovlin from Forth and Tay Offshore is going to then facilitate the Q&A session. So please, as Jaya said, use the chat box to send in any questions as we move along, and then we'll be looking to close off at 10:30. So I think we'll just get underway, and if I'll ask Paul to switch his camera on, and he can start the first session. Thank you, Paul.
Thanks, Gillian. Good morning, everyone. So I will do a quick overview of how international the industry, just as a form of a sort of taster of why this is an important area, because of the international nature of the supply chain, particularly the supply chain in the UK, and the projects that have been delivered so far. A lot of the components have come from far and wide. So export finance from both sides for the seller and the buyer is quite an important area to understand where the support can come from. So just to sort of emphasize, this is a bit rudimentary rather, but what we're trying to show is that your customers and those companies have a very global footprint. From the developers, this is just a list of some of the developers involved in offshore wind at the moment, including floating wind in the UK, and also some companies that are looking at the ScotWind process. So these are potential future customers, and for some companies already customers, and they have a very we've got Ireland, France, Spain, Germany, Norway, Denmark. Now, that's the developers. If we have a look at the tier one contractors, we see a similar picture with quite a presence from Norway, in fact. And a lot of the cluster members for both clusters will be dealing with these companies as subcontractors. And of course, these companies themselves can also benefit from UK export finance, and hopefully later on you'll hear how that can be achieved. But again, you see some more countries appearing in the mix. Italy, particularly on the heavy lift and the cables, and of course Demi offshore, Jan de Nul from Belgium. I've got GE under France because the turbine facility and the blade facility are currently in France, although I'm hearing rumours that may change, but on the UK front. but that'll be interesting. And of course, MHI Vestas, now just Vestas. So Vestas have taken over the whole of the company, but they're still very much based out of Denmark. So a very international picture when you start to look at the tier ones. Further afield, what we saw over the last, 2 years now, is that the reach of the supply chain is becoming bigger and bigger and further afield. So this map just quickly shows where some of the major components, both in fixed and floating wind, have come from. These countries highlighted have supplied either the cables, the substructures, other such things as I'm thinking of Prismium in Italy, Germany. There's quite a number of components. The turbines themselves, of course, is the one that I'm missing there. But as we look further afield, we're seeing the Middle East come into the picture with substructures coming out of the Middle East, India, topsides for the offshore substations. China's coming into the picture as well, again, to do with substructures, and Singapore on the offshore wind substations as well. And Korea has played quite a long part in particularly the jackets and the pipes that are coming from the jacket. So as this supply chain expands across, this is showing Europe and Asia, which is where it's spread to at the moment. What we need to realize is that when some of our companies are competing in this market, they're competing in a very, very international market. And I'm just highlighting there that components coming from China and Korea are coming about 18,000 to 20,000 kilometers by sea. And the question there for companies is, these companies can afford to do that and still remain competitive. So we need to use every tool in the box, including looking at export finance support to help us on the competition side, to remain competitive or to gain competitive advantage when dealing with countries with lower costs, and those ones in particular in the Far East. So this is just a scene setter for the real experts coming on after me from Bank of Scotland and from UK Finance. But some of the questions I just want you to, if you haven't already sort of thought about this, I just want to sort of run these past you, so to get you thinking about the content that's coming. So if your customer wants invoice for your products and services in euros, most companies would take steps to minimize the associated risk. And of course, most companies would understand that there is a currency risk fluctuation involved there, and therefore would take steps to secure particularly the length of time that it takes in offshore wind for the components, etc., to come to market. So from order to completion of order can be quite a considerable period of time. And of course, currency fluctuations can be quite dramatic in that time scale. If you win business from an overseas company and deliver to a market outside the UK, then that's export. Well, that you would hope is fairly obvious. But how do you minimize the non-payment risk if you haven't dealt with a company before? You need some security there to understand how you can minimize that risk, and hopefully we'll be able to sort of cover that this morning as well. If you win business from an overseas company and deliver it to their project facility in Scotland, we're asking, does it matter if the order comes from their overseas office or their UK sales office? Many of the companies I showed earlier have headquarters outside the UK, but most of them also have an office presence in the UK. And the question there is, does it matter where the order comes from? Well, yes, it actually could do. And again, we'll hopefully cover that off as to why that matters. And of course, many of you that are listening this morning are actually overseas companies looking at the UK market. So if you're buying goods from a Scottish or UK supplier, and if so, do you know how export finance can help? So there's another area. This is not just for the exporters and companies who are buying goods. So it's also for companies who are buying goods from mostly our membership in both of the clusters. So that's just a taster. I'd just like to hand over to Colin Walls, the Regional Director for Trade and Working Capital in Scotland from the Bank of Scotland and the Lloyds Group. Sorry, over to you, Colin.
Great, thank you very much, Paul, and thanks very much to everyone for having me. I'm Regional Director for Trade and Working Capital in Scotland. I look after the Bank of Scotland brand up here, but we're obviously part of Lloyds Banking Group. Now, most of what I do revolves around supporting our clients, whether they're importing or exporting. But actually, to do that, we try and take a more holistic view over their entire working capital cycle and their supply chain. So I'll talk more generally today, but also happy to get into some specifics around about importing and exporting on any questions that anyone has. Paul, if you could maybe go to the next slide, please. So what's most important from a bank, in my view, is, and you can work with a bank, I guess, in one or two ways, I often see. Some businesses like just have a bank there to refer back to when they need some products. So, for example, if they're exporting and they want some letters of credit, work supporting that, or importing documentary collections, whatever it might be, they'll come along. This is the transaction we've got. This is the solution I need. Can you deliver that for me? Now, I think that's quite limiting. And actually, banks can offer much, much more than that. So all banks will have someone like me that you can talk to, depending on who your bank is. And the area I think we can, as a bank, really add value is in actually first taking a little bit of a step back and thinking about what's the complete trade cycle of your business. Or it might be you just want to specifically look around a specific contract with a supplier or a buyer. And therefore, as a bank, and understanding that trade cycle, we can think about what I tend to think of as three key areas. The first one is, what are the risks in those particular contracts or the general trade cycle that you have? So that might be, for example, payment risk. So if you're buying on the procurement side, the risk of potentially having to pay funds up front before you access the goods, and the risk you might never get those goods. On the converse side, if you're exporting, the same thing is that you're having to ship product out before you actually get paid. And actually controlling the goods is a risk within that as well, and that kind of shipment of goods where that's relevant as well. So thinking about those risks, how we can help mitigate, and also important to think about the other side of the transaction. So making a transaction works for you. Well, that's great if you're buying product from a company overseas. Actually, it's great if we can find a structure that will actually benefit the supplier as well, because that means it's more of a win-win and there's more opportunity for the business. And I'll come back to that in a second. So managing risks is one side. The other big area, and absolutely crucial, cash is king. We've seen that on stretched working capital cycles since the COVID-19 crisis started back in March last year. Trade cycles have been really stretched. When you get into exporting and importing, general and international trade, it tends to stretch the working capital cycle. So having a bank to work with you to explore and understand that trade cycle and understand what funding elements there are, and this is the second piece, how do you manage to finance the working capital in your transactions, particularly if payments and shipments are all extended and so on. So for us, sitting down and understanding that end-to-end process, as you can see there, from tendering right through to eventually getting paid by the end buyer. What are the funding gaps, whether you're a supplier or a buyer as well? And if we can then find out what are these three areas, so we've talked about so far risks within the supply chain, we've talked about the funding costs within that, but actually there's also opportunities, and that's the third area. Looking at some of these structures where you may have traded in the past. I work with lots of companies that export, import, have done it for years. They do it in a very vanilla way, but they will sometimes turn business away, or they will structure transactions in such a way that it's not so beneficial for both parties. And that's not potentially profitable. So as long as we can secure a transaction, manage all the risks within it, if we can actually set the transaction in such a way that it benefits both parties, that potentially could make that transaction more profitable or have some other commercial upside. And that's where the added value of working a bank from the outset is going to add value there, instead of just coming along saying, look, we've got the bank product that you particularly need for this and we're going to execute that. that's the big difference for your banks. All banks have got pretty much all the product that you would need the vast majority of the time. The differential is where your bank's able to provide that support and chat you through transactions. So if you don't get that from your bank just now, then kind of push them to get that. It goes without saying, I'm always happy to talk to anybody, whether they're a customer or not. Paul, could you go to the next slide, please? So I'm not going to talk through all the products, you'll be glad to hear, but what we tend to then do is once we understand that trade cycle, we start to overlay what are the potential solutions on that. And the great thing about trade generally and global trade transactions and working as a bank is nothing we have is standard. All of the products you see there, they are kind of standard products, whether that's letter of credit, documentary collections, guarantees, import loans, and so on. But what we do is we take those individual products and then we come back to you and say, look, here are the options. So ideally, hopefully you've got more than one solution that might work, but we also tailor them, because if you come up with a solution that works for, say, one supplier or one buyer, you might want something a little bit different for the next buyer. And that's because buyers and suppliers that you're working with have different drivers on their own. Some are very focused on risk, some are absolutely just focused on cash, because cash and liquidity is a big issue for them. So in helping to understand that, we can get the best advantage for yourself. Paul, could you go to the next slide, please? So to help us do that, just very briefly, very busy slide here, so forgive me, but you'll get a copy of this deck, the complete deck end to end from Paul and the team later on. This is a tool that we have that helps us take a step back and look at the business and understand how your working capital operates. And effectively it kind of benchmarks, first of all, your own business and how you've performed over, say, a period of 4 to 5 years, and what changes have happened in your own working capital cycle. It's been very interesting this year because obviously the last 12 months have massively changed people's working capital. But sometimes you're so involved in your business, you don't always necessarily take the time to step back and see what the impact on the business has been. And this tool helps you see that. It helps see where you've allowed your working capital to get a bit more flabby or where you've been effective. And then the second thing it can do as well is we can build in peer companies that you work with, and we can start to benchmark with them. So these are companies that you would tend to know, and you can see where their working capital management is similar or varies from you to any great degree, and where there's potential opportunities for you to manage that much, much better. So this is not so much about individual transactions. This is about taking a step back and thinking about, how can you make the business more efficient? What opportunities are there to take advantage of? So it's a great tool. If anyone ever wants to kind of run a session, you'll have my details after day, so come back to me, we can do that with you. And the other one thing that we'll send out to you is a link to our international trade portal. So this is free to use. You don't have to be a Lloyds Bank or a Bank of Scotland customer. When you get the link for that, you can register. It's a brilliant resource and researching tool whenever you're exporting, you're importing, and that's looking for importing and exporting partners. It's looking at country analysis. It's a fabulous tool. I'm happy to promote it here because it's not, although it's branded Bank of Scotland, really it's not pushing product of ours. So feel free to go and have a look at that. Paul, next slide, please. Just a quick one. Again, this detail will be on the slide. But at Bank of Scotland, Lloyds Bank, we have a clean growth financing initiative. And I think it's worth pointing this out for two reasons. One, because of the sector that you're in, you very much are very likely to qualify for this. And this gives everyone an automatic 25 basis points discount on a large range of particular products and solutions that we might have. But just briefly, as an overview, I thought it was worth sharing because I think what it does show is the focus in our business as a bank. And we'll not be the only bank that does this. Clean growth is really high on banks' agendas. So when you're thinking about how do we get transactions done, it helps that you're in a sector that's high in the agenda of the bank. And when we go to credit, we're trying to get challenging transactions through, actually ticking the box of clean growth. I'm maybe being a bit cynical here, but if that helps us get your transactions through, that's a real positive thing. So your sector very high on our agenda, and it will be with other banks as well. Paul, next slide, thank you. So linking in what you're about to hear from Alison McMillan now, of all of the solutions we've talked about, the one thing that's a caveat in all of those is that most facilities that we need to provide will need some kind of bank facility limits, right? So there's got to be some sort of credit appetite there. And the great thing about dealing in the export side of things is that there are more options available and more support. And UK Export Finance is a fantastic support from UK government, and it's to help with businesses that are exporting. There are 3 primary schemes. There are more than this, and Alistair will probably talk about them. The bond support scheme, where we're having to issue bonds and guarantees for clients to support underlying contracts. A working capital support scheme, where we're providing finance for the working capital gaps that they might have in those. And the new General Export Finance Facility, GEF, that will also talk about, which is a new product that is much more generally going to support a wider group of businesses out there, including yourselves. Now, I really love this because this is where we as a bank are limited to some extent in the security, for example, that might be available to us, and we may be limited as to how much facilities we can make available to a particular client. What UK Export Finance can do is step in. They can provide a guarantee to the bank. So that's your bank. Most of the major banks are partnered up with UK Export Finance, and UKEF will provide this guarantee of up to 80% that deleverages the risk for the bank, and that allows them to potentially provide much higher limits than otherwise they would have been able to do. So I think that's probably a great segue into Alistair. I think I'm finished, Paul, and if you want to go on to the next slide, I'm happy to take questions later on.
That's
Thanks
great.
very
Thank you
much,
very much, Colin. Sorry, Paul.
Good morning.
Yeah, on to you, Alistair. Please go ahead.
Okay. Good morning, everybody. Thanks to Paul and Gillian for giving me this time to talk to you this morning. Hope you're all well or surviving, if not thriving, in the current environment. So great segue from Colin there into what I'm going to talk about is the support that the UK government through UK Export Finance can provide to UK companies who have export contracts or contacts with overseas buyers. And there's a little clue into what Paul was alluding to earlier as well. I'll just kick on to the next slide if we can, please. Okay, so we have a mission statement. We're a government department, part of the UK Treasury, and we're very closely aligned with Department of International Trade, and we work with Scottish Development International in Scotland as well. The mission you can see there, and essentially what it's about is supplementing the private sector when the facilities that Colin was talking about, the range of facilities that banks can offer, and insurance market I'll come on to as well, to support businesses in export contracts. Occasionally there will be circumstances where the security that the bank requires, as Colin mentioned, isn't fully available. So the facility level that the business requires isn't available from the bank, from their own balance sheet and their own risk appetite, and that's where we can step in and provide guarantees backed by the UK Treasury to the bank, which then allows them to increase the facilities they can give to the business and provide the facilities required. We operate at no net cost to the taxpayer, so we do obtain some fees from the banks when we underwrite the risk, which seems only right and proper, and that helps to cover any potential costs involved in providing the support. And okay, sometimes we make a slight margin profit at the end of that, which goes back into the business and our products, etc. Next slide, please, Paul. So just a little bit more here. We've been around for a while, just over celebrated 100 years in 2019. Although you may not have heard of us, we've been around for a long time. Some of you may have heard of us in a previous guise, which was ECGD, Export Credit Guarantee Department, which kind of says what it does on the tin. But we've been UK Export Finance branded for several years now. As I said, backed by Treasury, we work with lenders and credit insurers and support businesses by providing guarantees, etc., to banks and providing insurance where the private sector can't. A couple of some of our products mentioned there, the tried and tested ones. Next slide, please. So just again about our green objectives and green credentials. Clearly, it's very high on the government's agenda. The Prime Minister announced his 10-point plan just at the end of the year for renewables and clean growth. And similarly, we are very much focused on that as well as a government department. So we've provided some significant support already to renewable projects. One of the additions we have in our toolbox for renewables particularly is an additional 2 billion in direct lending. Direct lending is one of the services products I'll mention in a moment, but there's a specific additional 2 billion allocated for clean tech and renewable support. Next slide, please, Paul. And again, just objectives. Clearly, there's a lot. Offshore wind is the most developed. Onshore wind, offshore wind are the most developed of the renewable energies at the moment. Clearly, there's a lot going on with hydrogen, CCUS, solar expanding more as well, and battery storage, all these other clean growth and energy transition in itself as well. So there's a lot of things evolving, growing, developing. So we are looking to develop our support, how we support businesses across the clean growth and transition sectors, and adapt to the growing and developing needs of companies in the sectors. Thanks, Paul. Next slide. And on to the next one. So a bit about our product portfolio, if you just move on. Okay, so our products are separated into kind of three main categories. As you can see, financing, guarantees, and insurance. The financing side, these are the bits that Colin didn't touch on, but I'll come on to his bits in a second. So this is important for, as Paul indicated at the outset, this is important for overseas buyers, overseas companies looking to source goods, services from UK companies. So we can provide in the form of guarantees or direct lending, attractive finance and support the provision of attractive finance to overseas buyers of UK goods and services. So it can either be a macro level, so some of the projects are multi-million, multi-billion pound infrastructure development projects overseas, and we will probably be part of a syndicate providing the finance and guarantees in that respect. When UKF do that and provide support for overseas projects, we insist on a minimum of 20% UK content going into those contracts. So it creates opportunities, export opportunities for the UK supply chain. And I say it has to be 20% of the contract has to be delivered by UK companies when we support them. Typically, because it can't be below 20%, the contribution tends to be significantly more, 30, 40% is fairly common. We can also do effectively supplier credit financing, which is the same kind of thing. We would provide guarantees or financing to an overseas buyer for a specific contract with one UK supplier in this case. It can make it very attractive in terms of interest rates. So interest rates in some other countries are clearly, you think of Africa and other countries where interest rates are very high relative to where we are in the UK. So a UK government guarantee to a bank over there reduces the interest cost to the overseas buyer. It can also give them extended credit terms with our guarantee, whereas the UK supplier effectively has a cash contract, gets paid on delivery with no extended credit terms for them. So it can work both ways. There's typically a 15% upfront payment on those as well. Next slide, please, Paul. So an example of that, recent example of that, is a buyer credit. So this is the offshore wind development in Taiwan, Formosa 2. We also did Formosa 1. You see on the right-hand side there, it's a chunky contract, 230 million. So this is one of the large buyer credit kind of infrastructure kind of projects I mentioned that we support. Macquarie's Green Investment Group was a sponsor, and Swancore Renewable Energy as well. As a result of this, there was multiple contracts awarded to UK business, say, to reach the 20%. Significant 47 turbines and 376 megawatts of green energy being produced from this development. And at that point in time, I'm sure it's grown. Some of you may have already done this, set up in Taiwan to get into these kind of contracts, but it was 18 companies from the UK set up in Taiwan to help support these. Next slide, please, Paul. Okay, we're going to the guarantees suite. So these are the ones Colin referred to and Paul alluded to. These are the more direct ones for the UK companies and the support we provide UK companies to export. And as Colin said, where you go to your bank with a plan, with your financials, with your forecasts, saying this is what I require. And Colin and his equivalents in the other banks will do their calculations, do their assessment of what's required, how they can satisfy the need. If they're happy with everything else fits together, but there's a lack of security, or there's a risk issue that they can't take on themselves, then they will come to us and we can provide, hopefully, a guarantee to them to de-risk the transaction so they can provide the facilities, and that's how that works. The bond support scheme is for performance bonds. Some companies use advance payment guarantees to get a chunky upfront payment for working capital. Generally, that requires a bank guarantee to support it. Export working capital scheme, as Colin mentioned, the end-to-end working capital requirement of a business is crucial to delivering it and making it profitable at the end of the day. And cash is king, so we can help support export working capital as well. They're the traditional, long-standing, tried and tested products in the guarantee side. Next slide, please, Paul. And just a couple of case studies, a couple of examples. This is a very recent one. First Group, who are based in Aberdeen, traditional oil and gas company group, although they have various other arms as well. And their subsidiary First Subsea is actually based in Lancashire, has developed offshore cable protection systems, which are becoming quite popular, winning quite a lot of business. They did have quite a good pipeline and went to the bank early last year and were granted facilities. They then had a growing pipeline, won more contracts, and because facilities had just been put in place by the bank couldn't stretch the facilities any further because they were set for that year and couldn't be increased. So we had the conversation with the business, we had a conversation with the bank, and we agreed to, in this case, put in 50% guarantee, a guarantee line for bond support, so we could retrospectively cover 50% of the risk for existing bonds and 50% of the risk for new bonds for the new contracts that First Group win. And that basically doubles the amount of facility that the business can access because we're covering 50% of the risk. So I was with Clydesdale Bank, one of our partner banks, but as Colin said, all major banks are signed up to our master agreement, which allows them to access this support for the businesses, for our clients. Next, please, Paul. PCT Group Sales, based in Glasgow, just outside Glasgow. This is an interesting one because 3 million contract, decent sized contract. This interesting for a couple of reasons. PCT we've supported in various contracts for a number of years. They manufactured cranes, different sorts, Davit cranes, etc., and across multiple sectors. They're using multiple sectors. So this is the first renewables offshore wind contract we supported for them. That's one of the interesting points. The other interesting point is they were actually supplying another UK business. So their contract was with Saipem UK. Saipem UK had an export contract to Indonesia because the cranes were being shipped out there to help the manufacture of the wind towers for the development, and ultimately coming back to the UK for the NNG offshore wind farm. So again, it sounds a bit counterintuitive, things being shipped to Indonesia and then back again, but as Paul said as well, there's clearly some price differential issues, which means some of these things do go around the world at least once, which is not good for the ecology and the climate either. So we need to address that. So, but in this case, It was for an offshore wind contract. It's basically an example of where we can support UK businesses who are one step removed from the contract as well, from the export contract. So PCT supplying Saipem UK. Saipem UK had the export contract, but this was an intrinsic part of it. So we can provide the support to those businesses as well. And in this case, it was an 80% guarantee to the bank to secure the bonds that are required for this contract. That's the maximum we can provide. Thanks, Paul. Next slide, please. And last but not least, insurance products. Again, it's something we provide when the private sector brokers, insurance companies can't. The most important, most used one there is the export insurance policy, the one in the middle. So I won't dwell on the other two in the interest of time, but the export insurance policy is basically a debtor buyer insurance to make sure you get paid on your export contracts. Again, widely available normally from the private sector insurance. You may well have a broker that you use regularly for all types of insurance, and they should be able to access export insurance, buyer insurance for you in most cases. But some countries, some buyers, the private sector don't like. During COVID, we actually expanded our cover significantly because traditionally, because we are a support and fill the gaps, the private sector, it's normally non-OECD countries we support in terms of insurance because the private sector covers the rest. During COVID, it pretty much shut down. So we expanded our cover to Europe, the States, all the main developed markets were required so we could provide that cover that the private sector didn't. Next slide, please. Thanks, Paul. Unfortunately, I don't have a export insurance offshore wind example yet. Hopefully we'll have soon, but this was just a small company in Northampton, hygiene company, provide hygiene products, and they had it was a long-standing customer in the Middle East but they won a larger than normal order, and 90,000 for them was significant and not something they could afford to manufacture and then not get paid for. So they approached the broker couldn't cover it. There were some issues with the overseas buyer from the private sector's perspective. So they approached us and we provided a tailor bespoke single market export insurance policy for that contract. And again, that is available for any sector where the private sector can, assuming our risk criteria are met, of course. Next slide, please, Paul. So eligibility, and next slide, please. So there are obviously some criteria required to meet our needs and be eligible for these. So applicants must be carrying on business in the UK. So obviously as UK government support, UK government department providing support to UK businesses. The business, this is a crucial point, must have entered into a contract for the supply of goods or services with a company that carries on business outside the UK. So as Paul alluded to earlier, particularly for renewables, because we have a bit more flexibility here, the goods or services don't actually have to be going overseas as long as the buyer is an overseas entity. So essentially, part of our support, a lot of our support is around business growth, increasing exports, linking to balance of payments, etc. So if it's an overseas buyer, that is bringing foreign money into the UK, which helps the UK economy and the balance of payments, etc. So again, offshore wind, a lot of the developers and tier ones are overseas companies. A lot of them, as in the case of Saipem I mentioned a moment ago, do have set up UK companies to take advantage of the opportunities on UK shores. So we will be as flexible as possible, but quite important if you're winning some of these contracts and you need the support is to obtain either payment or the contract or both from the overseas entity rather than the UK entity, unless, as in the case of the PCT example, it is part of an export contract for the UK company as well. So one tier removed from an export contract, if it's a direct contract, it needs to be an overseas buyer. The 20% content applies to traditional bond support, working capital support, as we mentioned, and financing overseas contracts. At least 20% UK content has to be. So, it's fairly rare, and probably even rarer in this sector, but it's not possible for us to support where it's one man and his dog buying goods from France and sending them to Germany, and all he's making is a small margin. There's got to be a decent UK content involved there. Clearly, there's anti-bribery, corruption, environmental, human rights, etc. in terms of due diligence, which I'm sure you would all hopefully meet anyway, but we need to cover those. Next slide, please. So products, and Colin mentioned one of these, under the guarantee scheme. Two really crucial ones. The general export facility that Colin mentioned. So this is where we can provide basically a wider guarantee to the bank to allow the business to access a lot of those products Colin mentioned. So it can be an end-to-end working capital financing, including importing some goods, a manufacturing period, a distribution period, and a payment period as well, end-to-end financing. So rather than just being contract specific, it can be put in place as a facility guarantee to cover multiple contracts. So there's a lot less emphasis on specific contracts. There has to be evidence of export. Clearly, the business has to be an exporter, and there has to be export contracts in train or in pipeline that the facility is going to support. And the bank basically has much easier access to our guarantee, much simpler process, much easier to apply it to a variety of different products that they can provide to support the business. And again, because it's not contract specific, the 20% content doesn't apply in this case, although there does have to be a history of export and future export contracts in the mix. The export development guarantee. Sorry, if you can move to the next slide, Paul. Actually, I've got some of this detail on the next slide. Well, thank you. So that's your general export facility. It can provide facilities up to 25 million and guarantees up to 80%, which is our maximum under the rules, state aid rules, max period of 5 years. So again, in this case, you go to your bank, guys, with the bond support and working capital support before it. You go to your bank, work out what you require, cover your forecasts and your historic financials and what your requirements are. They can work out what best ways to support that, and then apply for our general export facility for a range of contracts, a range of products to support your business. The export development guarantee, again a new product, is larger exporters, larger contracts, 25 million plus, again 80% and up to 5 years. We are looking to make this a bit more flexible again with the renewables. We're looking to perhaps extend, not yet approved, but perhaps extend the repayment period beyond the 5 years for renewables in clean tech. This can be used as well for business development, not developments of the business, I should say. So, creating a new manufacturing facility, expanding facilities at the premises, new machinery, etc., as long as it is supporting future export contracts. So that 25 million loan could be, up to 25 million loan could be a different form of term loan, perhaps over 5 years, to purchase machinery or develop the business in some other way that enhances and increases exports. Again, 80% cover to the banks. The banks are taking still 20% unsecured risk in all of this. So they need to be comfortable with the business, the management team, etc., and the plans to make sure they will be prepared to take that kind of risk. Again, accessed, in that case, directly with Export Finance. We work with the banks to provide that facility. And next slide, please. And that is it. Thank you. Thank you. Hope that's been informative, and happy to take any questions.
That's great. Thank you very much, Alistair and Colin, for your presentation there. Hello, everybody. My name is Lindsay Shovlin. I'm a project manager for Scottish Enterprise, and today I'm representing Forth & Tay Offshore to facilitate the Q&A. We've had lots of great questions coming through, so keep them coming in the chat box. We've got about 15 minutes to get through them. Just before we start, I want to draw your attention to a link which we're going to pop in the chat, which is for Bank of Scotland and their international trade portal. Just had a quick wee look myself, and it looks really good as a starting point for any export ambitions and how to connect into the right levels of support. So we'll pop that in the chat, and we'll share that with the slides as well, so that you've got a copy of that. The first questions we've got coming through, if I could invite Colin onto the webcam as well, that would be great. Thank you very much. Okay. First question that we have here. For more involvement from the bank, does it depend on the size of your account, or does that service apply to all your customers? So is there a company that's too small or too big? Where do you start in the process? And what's a good candidate to get intervention and support, please? I'll start with Colin, and then maybe Alistair could follow up.
Yeah, it's a good question, and it will vary from bank to bank. And unfortunately, I'm a big fan of smaller businesses, and by which I mean that's what we call sort of business banking, retail business banking, sort of 3 million turnover and less, and that's the limit that kind of we have for business banking. It will vary, I guess, elsewhere. We're able to provide products, but it's more limited at that end of the market. So we don't have a complete, no, we can't provide you with trade solutions, for example. I can't answer for other banks, and Alistair may know a little bit more because I know he does talk to some of those, but it's certainly more limited, Lindsay, on that one. And I think the only thing that you can do there is pick up the phone, start the dialogue. This is the most important thing. I guess a chance to reiterate that point, to be talking to your banks early in the process. And that point I made about not waiting till you've got a transaction where you then need a solution, and it's difficult to back out. Early in the process, have the conversation, find out what's available. When I have discussions with those businesses, I know there are different options, and that's the secret. It's not off the shelf. It's about how I can make it work for that particular client. The biggest challenge most of the smaller companies have is this one about security and the limits available. But then that's exactly where Alistair and his team can come in and support as well.
That's great. Thank you, Colin. Alistair, is there anything you would like to add there?
As Colin said, from bank to bank, from a profitability point of view and structure point of view, smaller end of SMEs access these more complex capital facilities that the bank offer. Things I would say though, I mean, Colin touched it. If you have a business being involved where you don't necessarily have access to that now, if you win a major contract, if you have a significant pipeline of contracts which is going to transfer your turnover, you push your bank to say this is transformation, these are large, and you need an expanded product suite that the mid-markets, if you like, are different terms for banks. And speaking to the likes of Colin Evelyn's, the trade directors in the bank, because the person bank may be speaking to may not have a lot of experience of this stuff in the small line of SME. So it's making sure you check to make sure you get that with other people. Experience is that if you have those coins and your turnover is increasing, your project's larger, then they will the banks will often move you into that tier, can provide the support because your trajectory is getting you into that next level of banking supply. The other thing I was going to mention is at UK, we have lots of with alternative finance providers and brokers and etc. As well, where the banks can't, so we'll try and connect you, may be able to offer.
Perfect. Thank you very much for that, Alistair. You broke up a little bit there, so we'll keep going, but I might interrupt you on the next question just to turn off your camera to save your
Lindsay,
bandwidth.
just quickly, one last
Yeah.
thing on that, and I can't stress this enough. The best thing that companies can do is make sure they've got a broad network of people to reach out to. So any issues that they're having, whether it's with their bank or anyone else, then just get out and speak to you guys, to you, whether it's someone like me or it's an Al or whatever. Usually we can find some sort of solution if it's not, if what you're looking for is not available immediately when you start those conversations.
Yeah, I think that's a brilliant point. And we've got lots of great support systems in Scotland. We've got a no wrong door approach, whether you get in touch with Paul, myself, Gillian, my colleague Ian MacDonald, any of our colleagues in SDI, account managers, we will get you in touch with the right person. So never underestimate the network. It's always there to support companies. So absolutely an excellent point. Our next question is, let me scroll down a little bit. Okay, there's been a few questions around where companies are based. So if I'm a company based in Scotland and my HQ business is based abroad, is there an import issue to bring our products over from another country to the UK? Any thoughts on that?
Yeah, and I guess I should be careful because I'm not, although I work on the trade side to bank, that doesn't make me an import and documentation specialist. But my immediate answer to that is yes, you're still going to have those considerations because that's still effectively an import from, I think if we're talking about product coming from Europe back into the UK, even though that's intra-group. I guess what it does do is being intra-group, it allows you a little bit more flexibility. So for example, does it make it easier that you can import at cost of goods without any margins and then kind of minimize all the additional costs that might go on top of that? I think most of the challenges I'm seeing around about duties, given that the deal was done with the EU, have probably been more ones around about origin, certificate of origin. So products thinking, well, this has come from Europe, so therefore it's not an issue for us as far as tariffs are concerned. But actually, the products originally originated in China or somewhere like that, then that's starting to attract tariffs that wouldn't have happened before when we were all within the EU. So yeah, it's a bit the whole EU Brexit piece of that is a big question, I guess.
I'm sure it's a question we'll be coming on to, that B word. Alistair, is there anything you would add there? Is there any conflict of international businesses that have bases across the world and still getting expert finance support, or the guarantees or the insurance or the bonds? Would that create any conflict for being able to access support?
I apologize, I had to turn my camera off because my bandwidth was suffering slightly. Hopefully you can hear me now okay.
Perfectly, thank you.
Good. Yes, I mean, I think it goes back to what I mentioned in the slide deck, and the 20% UK content is crucial for our traditional support, for working capital and bond support. Less so with the general export facility. So there is some more flexibility now with our new product suite, but this still comes back to, it has to be a UK company that is exporting, that has an overseas buyer. If that UK company is effectively a post box for an overseas quarter company, that would be a challenge for us to support. But provided the UK company is adding value and generating profit, paying salaries, paying taxes in the UK, then we can normally find a way to make that work and provide the support.
That's great, thank you. And Colin, seeing as you mentioned the B word, Brexit, how is Brexit impacting the work that you and Alistair do? Are there opportunities? What are the threats?
Yeah, look, I think with most things, I'm a bit of an optimist, and I kind of think there's a balance here where it's easy to talk down some of the challenges now, and there are many, but there are many opportunities going to come from this. It's for those businesses that are best set up. I have to be careful, I don't want this to come across in a condescending way, but it's quite clear those businesses that have done all the prep and thinking about the documentation are faring much better. There's a number of issues. Every client I speak to is completely different. I think there are logistical issues. So although it's Brexit, When you look at access to containerization, for example, that's a big issue. So that's not affecting tariffs and so on, but it's also affecting goods that are coming in from South America, from Southeast Asia, wherever it is. There's just a capacity issue. I was reading an issue on a challenge, in fact, of vehicles coming in from Europe. This is kind of road transport coming into the ferry ports. That there are big challenges then on there being no product, because businesses in the UK the view they're taking is, I'm actually going to kind of really limit the amount of exporting that I do. Look, it's easy for me, I don't run a business, but one thing that strikes me in this is a lot of it that I hear about has got to do with familiarity. I don't see them as barriers that ultimately stop us doing what we need to do. But it's about, I think, people having to dive in, work their way through the issues, and then get that level of familiarity that they actually have. And I think that's been easier for those businesses that export and import beyond the EU, because the EU has kind of become a little bit more typical to the wider kind of global marketplace. So it feels, and I say, I want to be careful because there are some real challenges out there, but a lot of it's definitely about jumping into the deep end, getting used to documentation, working your own process through, and keeping the dialogue open with your suppliers and your buyers and working together on that, because that's the other key thing, that you're working very aligned to the counterparties that you operate with.
Thanks. And Alistair, any Brexit thoughts, any insights you can share?
Yeah, I suppose the support we provide, Brexit doesn't really impact it as such, because it's any export that requires our support can be accessed. I guess I would say going back to kind of Colin's working capital slide that he put up quite early on, you need to probably just take into account any potential delays and hold-ups, either initially while teething problems are settling down on Brexit, or if there are delays in logistics and transportation and duties, etc., that could impact the cash position clearly, and how quickly you're going to get paid, how quickly materials are going to land in the UK, which you then have to fabricate or whatever. So I think it's probably greater impact potentially on cash flow. But our support is definitely available across Europe, across the globe, in the same way.
And I should say as well, Lindsay, because I did allude to the fact that whilst there are challenges there are opportunities. So it's probably only fair that I give an example of one of the things that I've come across. In the turmoil that's been there for businesses, actually it's been quite interesting that they've started to say, where before Brexit happened or before the new transition took place, they had a very kind of this client, a very low risk, this is the way we've always transacted. When they were looking at their supply chain, they had a very fixed set of suppliers they operated with. And this has made them start to think about, well, hold on a minute then, if I'm going to have this upheaval anyway, should I now start thinking about getting that supply from, whether that's the US, whether it's China, Vietnam, it doesn't really matter. And it's really opened their eyes up to quite significant reductions in cost for that procurement. Now, that was crucial that we were working together on that, because then they had to think about things. So, for example, let's just say you source something from China instead of Germany. So say it's a steel product or something like that, you're going to be getting that in from Germany within 3-4 days typically, where all of a sudden you're now talking 8 weeks. So it completely changes, as Al has just mentioned, the whole working capital piece. And it comes back to my presentation. If you kind of understand that, it's important to look at it and say there's some massive upsides, but those risks that you potentially see, whether it's the risks of kind of shipping from a country or dealing with customers you don't know, or it's just the extended working capital, these can be managed in most cases anyway. And that's where the bank can help you manage that, but actually take advantage then of much cheaper pricing for still good quality product. That really improves your productivity. So coming back to my point, businesses are looking at going, this is going to be hard work anyway. Let me just explore the wider set of opportunities now. Whereas they've kind of just had same old, kept it nice and vanilla for the last 10, 15 years.
Yeah, that's a great example, and lots of great information there, lots of great questions. I know there's a couple of questions in the chat that we haven't managed to get around to. We're sitting at 10:30 now, so I'm going to close the session with a huge thanks to Colin and to Alistair for their insights today. We will be sharing the slide deck and the contact details if you'd like to get in touch with either or all of our speakers today. I'd like to thank Paul and Gillian for leading on this joint cluster webinar today. And wishing you all good health. Keep in touch with us. Let us know how we can help you. And thank you for your time today. Goodbye.
Thanks. Bye.